throwing some Bitcoin at the problem would work, I'd be all for it, but I don't think so. I think this is a matter of America coming to realize that they're playing with fire here, that you just can't be on this be on a fiscal and monetary trajectory where the government prints all the money and the Fed buys a lot of the treasuries and then some bad foreign actors, and think that there's not going to be any consequence. There always is.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Bohm. We have a super great discussion lined up today that I'm really excited about. Today, we're fortunate to have with us Charlie Gasparino. Charlie is the senior correspondent for Fox Business at Fox News Media and also a current New York Post columnist. Charlie, thank you so much for joining us today.
Anytime, Gary.
All right, so let's start with a proposal that Robert F. Kennedy is putting out there lately. The U.S. dollar used to be backed by gold. RFK Jr. is out on the campaign stump talking about backing U.S. Treasury bonds with a small basket of precious metals and Bitcoin at a very small 1% backing. How impactful and stabilizing would this be, and what would a backing of 1% do to the price of those assets?
I don't quite understand it. I mean, the old gold standard, it was a backing of, I believe, 1-for-1, or at least a guarantee of 1-for-1. We had a lot of gold in Fort Knox, just a sort of fig leaf of monetary stabilization. Probably won't do the trick. Listen, if it leads to less debt being issued and a less debasing of the currency, I'm all for it. But I don't know if that's necessarily it. I mean, I think what really is needed here is, the American people to feel, I hate to say it, some pain for the fact that all we do is print money and debase the currency. And, I'm all for going back to I don't know how you go back to the gold standard. Half of me says I'm for it because I've read a lot of Ayn Rand and Greenspan back in the day, who was a gold bug himself. But, put that genie back in the bottle may be really difficult given, just the global economy where finance is today. But kind of a more easier and sort of, I think, common sense fix would be get our fiscal house in order. And by the way, I've been hearing that phrase since the late 1990s when Dick Dorman was talking about it, after the Reagan boom years, and we had a stock market crash and George Bush was in office. Everybody was, running around with their heads cut off about worrying about the deficit. And we still haven't got it under control. I mean, there was brief periods where we grew out of the deficit. The dot-com bubble, which was a bubble, and so that produced tremendous amounts of revenue. You also had this sort of weird thing that happened where you had divided government. You had a president in Clinton that actually believed to an extent in sounder fiscal policy. I mean, he actually said it. I mean, he had a Treasury Secretary, Bob Rubin, a conventional wisdom that raised taxes to pay down the deficit, not to spend like Biden is doing today, or Obama did, or even Trump did. Trump spent tremendous amounts of money, more than we had. And then you had Newt Gingrich in as the House Speaker, and Republicans controlled Congress, and everything. They made a concerted effort to basically cut when we didn't need to spend because the economy was booming, and it worked. And then we haven't had much fiscal discipline since then. We had wars, unnecessary wars in my view, particularly in retrospect, and a lot more. So. Maybe if throwing some Bitcoin at the problem would work, I'd be all for it, but I don't think so. I think this is a matter of America coming to realize that they're playing with fire here, that you just can't be on this, be on a fiscal and monetary trajectory where, the government prints all the money and the Fed buys a lot of the treasuries and then some bad foreign actors, and think that there's not going to be any consequence. There always is. Maybe it's delayed, but it happens.
Yeah, it would be nice to see some of the politicians, any of the politicians, standing up for some austerity measures, but that just doesn't seem the case. So there's a theory that inflation would be a heck of a lot worse if it were not for the massive influx of cheap labor coming across the southern border on a daily basis. what is your take on inflation? Are we in for like a 1970 style peaks and valleys where the next peak is worse than the previous one, which was 9% from 2 years ago? Is Fed Chair Powell going to be able to come out and say that the new inflation target begins with a 3 instead of a 2? What do you see with inflation?
Well, I mean, I think you're right about the immigration issue. I mean, just letting people in the border, having people chase low end jobs and drive down the wage rate is really it's problematic society. It's not just inflation, which is a pernicious tax on the working class, but it's just a problem for society that we have people like on the low end fighting for crumbs and willing to work cheaper and cheaper and cheaper, and jobs that let's face it, this is not the industrial revolution. Groundkeeping and janitors is just not a growth industry, right? It's not like we're just building cars, a new invention. And so we have a real problem with labor, and and usually the welfare and the left wants the welfare state to sop up the difference, which is a scary proposition. In terms of inflation, even with that influx of labor, it's still really not going away. I mean, I know the markets think that the Fed's going to cut because there was a little better inflation read, but I don't know. That number did not say 2, unless you think 3.2 is the bogey now, right? So I just don't know.
And of course, Charlie, I don't mean to interrupt, but they're cutting out, important items like coffee out of the
Right.
index in order to contain,
That one, it's
yeah,
expensive.
in order to contain the index to 3.2.
Right. I know it's really crazy, and so I think they're playing with fire. I mean, the market, and I go out to dinner with a lot of like smart market guys, and they feel really giddy that they're going to cut in June, July, or September, something like that, like before the elections get going. They really feel giddy about the markets, and it's funny listening to them because I've been wrong. People like me are wrong often, right? Because we look at the negative side of the balance sheet, and obviously the Dow has gone to 40,000. That's not very negative, right? But there are a lot of potential pitfalls out there. And one other thing that people forget, and so I can't believe more people aren't like taking this. This is the easiest bet in the world. 5% on a money market fund right now. Why do you need to gamble at Dow 40,000?
Yeah, and that's on less 6 months or less.
It's the easiest thing in the world. And even if they
Yeah.
cut rate, still getting 4+ and sleeping at night, it's still not worth it.
Yeah.
Right. So that makes me worry about the markets, the economy, and a crash maybe or something like that.
Well, and at our age, we've lived through several crashes, and
Yeah.
they were very significant and impactful. And who has another 10 to 15 years to wait to get back to the nominal amount anyway?
Right.
But under the Biden administration, the U.S. has run record non-wartime deficits that are approaching really a staggering $1 trillion a quarter. If Trump is elected and they stop the deficit spending, doesn't the economy crater? Because it needs the liquidity. And if they keep it up, how long can this level be sustained before a debt crisis emerges? So, what do you see moving forward post-election based on this historic deficit spending that's been going on?
Trump didn't cut much when he was in office. Remember, his policy was not fiscal restraint by any stretch of the imagination. Particularly as we hit COVID, he spent much more than we needed. In my view, that's a huge negative on his record, and it's not totally appreciated by his conservative supporters. I at least from what I'm reading and what I know from these folks. But one thing I will say is that if you talk to people that I think will be in this administration, and I do talk to them, they are fiscally conservative. They understand the deficit. They think they can make up the difference on the supply side, that they can grow the economy and not necessarily just cutting taxes, but that might be in the mix in some marginal way. Maybe not like wicked Reagan era tax cuts, but something more marginal to produce increased productivity and economic growth. Also regulations. I think they're gonna take the shackles off the economy that Biden put on, and I think some of that stuff has got to be helpful, in my view. I mean, it's got to be helpful if we can drill again in a more normal way. It's got to be helpful that ESG is kind of gone. I mean, ESG is a huge headwind for this economy. I don't, I've just finished a book. It's going to be out in August. It's called Go Woke, Go Broke. And you can literally track the declining productivity of the U.S. economy to the growth of stuff like environmental social government investing, and how companies were under the gun to do all this like stuff, sort of social stuff, including being really cognizant of their carbon footprint. Which, by the way, there are laws that say you can't dump chemicals in the Hudson River and stuff like that. I mean, it's just it's really so. I think a change in administration in terms of ideology and how to make the economy grow will be much more helpful than what we have now. We really do have a radical experiment of the left right now in terms of the regulatory state. Lena Khan at the FTC, the people who are running the FCC, you can go down the line. And we almost had a very radical person running, on the FCC, and Gigi Sohn, that got voted down. But, it's still, the Biden regulatory apparatus is incredibly left wing. I mean, they don't believe any mergers should occur. I mean, no mergers. I mean, they are, it's funny because the media, mainstream media is, not podcasts like this and, stuff that I do, is mainly left of center and very left. Yet the Biden administration is doing all it can to kill it. And here's how you just look at what's going on at Paramount right now, how Sherry Redstone needs to sell the company because its programming is just in a sort of linear model, is just not selling, doesn't pay the bill. So you got to do something. She wants out. The most logical thing for her to do would be to sell it to the most logical buyer, which should be a big tech company that wants to get into programming and supply us with, like when you're watching Amazon, get more, maybe watch CBS, maybe watch 60 Minutes. You understand what I'm saying. But because the Biden administration won't allow that, you don't have really true price discovery on her assets. So you're literally stuck with two crappy deals that she has to sell to. One that probably can't get approved by regulators. The other one, which is so complicated that common shareholders aren't going to make that much money on it. It's a shame. And what's happening is that media assets are imploding because of this. And it's kind of like it's kind of interesting because the Biden administration should want the media. A strong left-wing media might be good for him, but what they're doing is totally the opposite.
Well, so I want to ask you a question on gold really quickly. So central banks around the world have been buying record amounts of gold. They've been doing that in lieu of buying treasuries over the last 10 years. There's been a major shift towards gold buying. Western investors haven't really been buying gold. In fact, you could look at some of the ETFs and they've been draining out. What role do you see gold playing in the months and years ahead for both countries around the world and citizens within the U.S.? Do you see it coming to gold?
I mean, I don't know. I mean, that's not my bailiwick. The one thing I can say is that Western nations are basically not looking at gold as much anymore. At least Western investors, I should say, and maybe this is reflected in what the nations do, don't see gold as the store of value it once was. They see Bitcoin and they see crypto. I mean, and I think that's part of it. I think that the whole crypto craze is taking the place of gold in the West. I'm not saying it's a good thing. In my view, it's kind of a bad thing. I do argue with people about this a lot. Like a friend of mine was like, "Oh, what can you do with gold?" Well, I said, I have a chain around my neck that's gold. Well, okay, but crypto. I said, well, what can you do with crypto? I mean, what is the sort of, as a commodity, what is the utility of a Bitcoin? Other than access to the Bitcoin, transactions that are seamless, that no one seems to use anyway because it's not that seamless. Maybe, I just don't know. I mean, like gold, there is gold in certain things, right? There's gold in watches. I think someone told me there's gold in an iPhone. I mean,
well, do you see, if there is a extended inflation, or if there is a market event that you were talking about earlier, usually in those kinds of events or circumstances, people normally flock to safe haven assets. And, the safe haven asset of choice is typically treasuries. And then secondarily, it's been typically gold historically, but treasuries over the last 3 years have had the greatest losing streak that they've ever been on since I believe, the Great Depression. And
there's a
maybe
reason.
they're just,
It's because
yeah.
of rates and printing money and things of that nature, right?
So maybe folks would be more inclined to turn to the gold and the Bitcoin assets instead, in lieu of turning to treasuries. I'm saying not 100%, but I'm saying on the whole. Do you have an opinion on that?
I think gold is competing with Bitcoin right now. I mean, that's my major as a store of value. And I think, we might see people turn away from the dollar. I mean, turning away from the dollar is not good from treasuries. I mean, right? Am I missing something here?
No, I don't think so.
No. So, I mean, if you do have a run on the bank, treasuries will still underperform, and people will put their money in something. The problem is that gold is competing against Bitcoin. I don't know if it's a fair competition. I don't know if it's a smart competition, but that's why I think there's a damper on Western investors buying it.
Well, I appreciate your viewpoint, and just to respect your time, I got one more question. But before we wrap up here, and I asked Charlie that final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com, put in your email address to subscribe. And when you do, I'm going to get you a free gift. It's a report that we wrote based on the important Ray Dalio foundational premise titled, "If you don't own gold, you know neither history nor economics." It's a free gift. It's a must read for everyone on why we should all own gold. So head over there, metalsandminers.substack.com. Also, I'm positive you've enjoyed the conversation with Charlie as much as I have. Please let him know. Hit the like and subscribe button and leave a comment below. Charlie, in wrapping up our discussion, my final question is, do you see, or to what degree do you see the potential of a crisis coming that is so large that it could usher in a central bank digital currency and potentially universal basic income?
Wow.
Yeah.
I don't think we're heading for a banking crisis. That's kind of something that might cause it, like where the market seize up. I covered that minute by minute when I was at CNBC back in the day. And I remember
watching.
Yeah, I broke the story about TARP. I remember everybody took a big sigh of relief, but then there was another problem and another problem. It was like fingers in a dike, and it established some really bad habits. We started thinking that the Fed should bail out everybody, that the banking system was sacrosanct from risk, which in my view is problematic.
Yeah.
That said, I don't see anything that off the charts financially right now. There is a meme going around that, the markets are way overpriced, and that inflation, if it doesn't tamp down, you're going to have to raise rates dramatically. And that could lead to Dow 30,000. I think let's just posit if the Dow went from 40,000 right now to 30,000, what type of societal unrest do you think it might have?
Yeah, I think it would have unrest. I think people would be very antsy.
Right, because some of this is like, you can paper over the fact with inflation, with, people looking at their 401ks, right? And saying, well, that's a little, they can't really touch it. But,
the wealth effect.
Yeah, the wealth effect. But, when you have high inflation, it is, people are in a sour mood. I mean, let's just be real clear. Joe Biden is losing to Trump. One of the reasons why he's losing, because he's losing ground against working class blacks, Hispanics, and whites. The working class, multicultural and racial, are voting against Biden. They're not doing that because they like Trump's hair color. They're doing that because of inflation. That's a pernicious tax on working class people. My dad was a construction worker, a bartender, a cab driver. I grew up in the 70s. I remember you had to work 3 jobs to get decent food on the table. We just were not making enough money. It was hard. And we did not, I lived in a 1,000-foot square house in Westchester County. My old man bought it for $16,000 a year. It was not like we were living high in the hog. You know what I'm saying? We had used cars, but you had to work 3 jobs and you had to do stuff. That is not a recipe for societal calm. You know what I'm saying? So I think you got to deal with this inflation problem, and it could be rough if you really want to deal with it.
Yeah. Well, Charlie, I really appreciate your time. Thank you for coming on to Metals and Miners and for being so generous with your analysis and your ideas. It's been amazing to spend even just this brief period of time with you. Would you share with the viewers any final thoughts you have that you want to leave with those tuning in, where they could learn more about you and your work, and how they can connect with you?
Well, I'm on Twitter, much to my wife's chagrin, getting into arguments with people, but I try to cut back on that. I do a lot of stuff on Facebook, Twitter, and LinkedIn. You can follow me, and I post my stories and my thoughts all the time.
Yeah.
I break news, I break it on all three. I write for the New York Post every Sunday, and pretty soon I'll be doing a newsletter for the Post every you can get online. It's called On the Money with Charlie Gasparino. That's going to appear in the next week or so. I'm writing a book that's coming out in August. It's called Go Woke, Go Broke, The Radicalization of Corporate America. It's a journalistic account. I spent a lot of time speaking with Larry Fink.
If you get me a cover, I'll put it up on the video.
I will get you a cover. I will get you, and Fox every day, Fox Business and a lot Fox News, talking
Wonderful.
about finance and politics and things of that nature.
Yeah. Thank you. I look forward to having you back on, Charlie, sometime soon. Thank you for being here with us, and everybody else, thank you for watching.
Thank you.
And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." It's a free gift. It's a must read for everyone on why we all need to own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe and receive that free gift on us.